Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to go through Twitter, see what people are sharing on social media. I'll interject my financial opinions as we go through it, generally related to three different topics: wealth building, commodities, and/or financial topics. So let's dive right in, take a look, see what's going on in social media. If you want to follow me, it's @_finance. And if you want to join our community, finding-value.com, where I dive deeper into all of these topics and subjects, looking for investment opportunities. And you can see the website and the code in the bottom of the screen. Cody Sanchez says, I talked to four of the leading AI experts in the world this week. All are convinced that universal basic income is the only way to save the average worker. All of them say that. The more I think about it, the more I know we are in a race for asset ownership worldwide. And those assets will be the only thing that stands against many humans and irrelevance from artificial intelligence. I refuse to believe that humans will have no purpose of labor, that machines will be so much more powerful and valuable than we are and thus make us irrelevant. Humans are not happy without work. We know this. And yet, the future is moving fast and is massively unevenly distributed. If it is true that most humans won't keep up with machines, then the next move is to own things that are in limited supply: hard assets, real estate, brick and mortar businesses, and data centers. The infrastructure that allows AI to expand and humans to continue to function in the built world. I knew my life's mission years ago was to convince people to become owners, even just an owners in mindset. I thought the imminent threat was baby boomers retiring and businesses closing forever. I was wrong. It's even more intense. In the short term, AI is replacing so many jobs that it'll be hard to fathom. If that's true, then entrepreneurship is one of the final frontiers. I hope I'm wrong in many ways. How am I? How am I or wrong? The way that I view it is that all wealth is a combination of commodities plus energy. That is at its basic core. So building a house, it takes energy and materials. To produce cars, energy and materials. Um, and everything that we enjoy in terms of wealth is basically the consumption or use of energy into travel or into converting commodities into usable products or converting energy into food. So, at the basic root, if you eliminate the middleman's the labor, the human capital, and all that stuff. If you eliminate all that, then all of the wealth that would be generated would be by machines. It would be a machine feeding another machine to create items of end use, which means that all wealth ultimately is in the commodities and the energy itself, and then the conversion of those commodities into usable products. If AI gets advanced enough and you get out there, what that does is it takes away the middleman too. The middleman is the businesses between commodities, energy, and yourself. You could coordinate with artificial intelligence if it gets to that advanced stage where all businesses become obsolete and maybe even the currency, if you think about it. So the hard assets and the scarce assets are the things that hold value, and real estate, um, the things that people always want. And I mean, for the most part, if you think about what people really want, this is really what it boils down to. Um, in my opinion, it's being able to travel from A to B. That could be cars, train, it could be airplanes, whatever it is. And then traveling goods around, so the goods that people want, and then the travel of those goods, and then the making of those goods. And that's really all it is. And food production, obviously, food production and water, clean water, and stuff like that. So, yeah, I mean, I don't. Artificial intelligence, I think, will first hit the repetitive jobs. The jobs that aren't repetitive will come after. But anything where you're knocking out, like code that's repetitive, you're ordering things, you could eliminate all those jobs. There's a lot of jobs that could eliminate that I could see easy elimination. And then the design, if AI can kick out just ridiculous designs, then that would be pretty sweet too if it could do that. So here's Tim Denning. There wasn't a ton of stuff on Twitter sharing about particular commodity stuff. So a lot of this is people talking about their life here. So my number one regret in life: I wish I didn't waste my 20s slaving away at a 9 to 5 banking job. Here's 10 pieces of brutally honest career advice that I'd give to my younger self so you can avoid his failures. He says, don't be a little bee. I didn't quit my boring career until 34. I spent 4 extra years thinking about that decision. When you go all in on a business you own, it forces you to make it work. Yeah, you don't have an option B. But what I would suggest is as early as you can, you'll have to figure out how to get out of the 9 to 5 job. So you need a side hustle. That's really what you need. It's difficult when you're young because you don't know what you want to do. You don't know what you're good at. You don't know your skill set. You haven't really developed your skills. So I understand being, when you're 21, 22, 23, it's hard to figure out what direction you want to go. But the quicker you figure out that direction, I think the better off you'll be. He says, expect to get fired. Expect to work for a bad boss. Expect to get bored at a cubicle job. Don't hope your career is awesome. Build something online so it is awesome. And I agree with that. Uh, I never got fired. I got laid off, but I mean, that was self-induced. Expect to work for a bad boss. I would say all my bosses, for the most part, were not that great, with the exception of maybe one that was okay. But for the most part, there was nobody that was really that great. They were all kind of yeah, and expect to get bored for sure on that. Start building a side hustle as early as you can. I totally agree with that. Side hustle is a great way to test a future career or business. Wake up at 6 a.m., start your side hustle, clock in at work at 9 a.m. Well, I used to start work at 6 a.m., my normal job, and then I would do it after work. Cheat on your boss with your side hustle. Every spare minute you get at work, secretly work on your side hustle. Meetings, town halls, time between projects. Keep quiet about it, about what you're building. And I kept quiet at my work when I was doing YouTube and all other things. And yeah, they even investigated me at work because somebody found out I had a YouTube channel. And I was like, oh my God, that drove me away from that company so fast. I was like, okay, if I can't do this in my spare time, screw you guys. Never trust an employer. HR tells you what you want to hear. Your family, take unlimited holidays. We'll pay you big bonus. Corporations sell employee dreams, not reality. I don't know. I'm not as negative on that, but I never really listened to HR anyway. So when layoffs strike, you learn the truth. Just ask big tech employees. No employer gives a crap about you by design. The point of capitalism is for the company to profit as much from you as they can while paying you the least amount of money. Work towards becoming an owner or be owned. Yeah, and that's when I first started working, all I bought were assets because you had to be an owner. And if you own stock in companies, you are owning assets. Use money to make more money. Completely agree. I learned investing way too late. Yeah, it's exactly what I did as early as I could. So I never made enough money to quit my job and live off my savings for a while so I could build a business. You must have some of your income come in on autopilot. The more, the better. And that's the dividend income that I created. So what I did is I saved all my money in my 20s, early 20s. I mean, I had fun, but I didn't go and buy frivolous crap. I just invested all of it. And now I'm basically living off a lot of the dividend income, and I reinvest whatever I don't spend. But yeah, it comes in an autopilot. It's also a safety factor. So if something happens to your income, it'll supplement as a base income to continue to pay needed expenses and whatnot. Read about books, gold, crypto, stocks, investing psychology, the history of financial markets. Make sure to learn about big crashes like 2008 too. This is how you stay invested when dummies are panicking. That's exactly what I did. I dove into market cycles. I created the three pillars. The better investor you are, the more you can look at the world from a different paradigm. And the better investor you become, the more money you make too, and the more resilient you are in life. So the salary isn't going to make you rich. $150,000 a year salary is an absolute curse, just enough to survive and be comfortable. Not enough money to escape the rat race. Be free and build something you care about. See the golden handcuffs for what they are. That's pretty true. Don't trade your time for money forever. A standard career is where you sell your time. Some transcend to become freelancers, contractors, consultants, but they're still tied to an hourly rate. I would agree with this. If you sell your time, it's usually at a fixed price. If you're an owner, what happens is you make more money in shorter periods of time. So if you're selling your time at a fixed rate, you know exactly how much you're going to make. And the owner knows how much they're going to pay you. That's not a good location to be in. The more you acquire in assets, the faster those assets can grow for you or compound. It took me 10 years to learn this. The best long-term career has two rules. If you don't show up to work, do you still get paid? And do you get paid for the value you create or the hours that you work? Divorce your time from your income to get wealthy. Create some form of leverage. Totally agree. Learn sales or starve. People have so many limiting beliefs around sales. Sales is just helping people. It's not illegal, sleazy, or unethical. If you don't sell, then you'll work for someone who does, and you'll get 95% less money as a result. The best form of sales is when you use radical transparency, no shady stuff, lay all your cards on the table, give out emails for real people you've helped. The truth converts more sales. It helps you have unstoppable confidence too. Change jobs like you change underpants. Comfort is the kiss of death. Change jobs every 1 to 2 years so you learn new skills. Most importantly, meet new people. The more different industries, the better. Learn what works in business from the best, then get the heck out of there and replicate it. That's how you make bank. You don't need to build a startup. Wait, what? This thread feels like an entrepreneurship porn. It's not meant to be. Not everyone is going to be Jeff Bezos. No freaking worries. A one-person business is good enough. A one-person business forces you to send invoices, act like an owner, get paid for value created, take personal responsibility, get paid first and pay tax later. Huge hack. An employee is a one-person business with a single customer employer. Get at least two more. And that's what he's got there. And I agree with most of what he said there, for the most part. And here's Steve, Millionaire Habits. We'll go through this too. This is 20 things your multi-millionaire neighbor isn't telling you or anyone else. His circle of friends is a tenth the size of yours. Quality over quantity. She or he doesn't know or care who got voted off the island. He doesn't need your money advice. She's a millionaire because she majored in computer science, not medieval basket weaving. He sold that overpriced BMW years ago to someone who is $50,000 in credit card debt. She strength trains at least 3 times a week. That's actually what I do. Actually, these guys are literally, the one before and this one is literally me. It really is. I strength train 3 times a week. He meets weekly for coffee with 4 other people and talks business, money, and opportunities for growth. She reads for at least an hour a day. He has 1 year rainy day fund and sleeps like a baby at night because of it. This is literally me. She has a 5 year and 10 year career and life plan. He invests before spending. Yeah, that's me. She doesn't give two craps what to buy. She didn't get rich by keeping up with you. I agreed. He gets up at the same time every day of the week, including weekends. Circadian rhythm is a life hack. That's what I do. She drinks at home, not at bars. I don't drink alcohol. I just drink water, guys. I don't even drink Coke. I don't drink Pepsi. I don't drink any of that crap. I just drink water. He's never paid a single dollar in credit card interest. That's me. She invests only in index funds, no day trading, no individual stocks. Well, I do a lot of individual stocks. He automates everything, investments, bill pay, everything. I don't automate anything. I barely have anything to pay anyway. Well, I automate my mortgage payment. That's about it. She changes companies every 3 to 4 years. I don't change companies anymore. He chooses friends who are more successful than he is. I don't think that's important, but whatever. She hasn't watched the news in 20 years. Dude, I haven't watched the news like forever. Like, I never watch the news. That's crazy. Out of these 20, I probably fit a good 80 or 90% of those. I drive a crappy car. I don't care about what I buy. I wear no name, no brand clothes for the most part. And I want to be healthy. So I eat at home for the most part. I eat at home, and I only drink water. I am actively trying to figure out what to eat or what I'm missing in my diet to stay at a high functioning level for myself. Mac 10 says the Bible will not have to be written after this event. In the end, where the circus clown is the last emperor. And he's saying with this ratio, tech divided by S&P, that we're going to see a big tech crash. Kind of like the dot-com bubble. This is the artificial intelligence bubble. I don't know if it is or isn't, but maybe that's the case there, where we could see a big move lower in technology stocks against the S&P. It looks pretty bearish. Here's some of my charts. I like energy, obviously. So this is oil versus gold and oil versus QQQ, which is technology. I'm kind of tying it into this one up here. So cheap oil versus expensive oil versus gold. And we're in the cheap location. In fact, we are still today cheaper against gold than any time before before today of the last commodity bull market. We are cheaper today than any time during the last commodity bull market. Beginning, end, it doesn't matter. So I think that's a huge opportunity. We've got a squeeze up here in the corner and a potential break higher for oil to outperform gold. Yeah, I know. And it also looks like a shoulder, head, shoulder that has developed. We've got this double bottom for crude oil versus QQQ. We had a massive outperformance of crude oil from 2000 to 2008. That was a big bull market. We are going to create another big bull market that's coming where crude oil is going to outperform technology stocks. I think that this is a double bottom. We also have a falling wedge that we just recently broke to the upside. I think we're ready for a launch mode at some point here. I can't tell you exactly when, but I think we're going to go and really push higher at some point. So crude oil is going to outperform, I think, maybe everything. I think we could outperform silver, gold. When this cycle comes into crude oil, we'll have our time in the sun here. We'll have a massive outperformance. Here's uranium versus gold. I was also curious about uranium. Uranium follows oil in the energy markets. We had a big breakout, and then we had a pullback. So there's your big breakout. It's a double bottom. We've broken out, and then we had a big pullback back to the breakout. The retest is done. I think uranium's ready to go higher. Uranium looks absolutely excellent for a big move against gold. So does oil. So does oil. Here's Calvin. He says, average wage in 1925 America was around $5,500 per year. At the time, however, $20 gold coins were still being minted and circulated as part of the U.S. money supply. The American worker paid in 275 gold coins in 1925 is equivalent to $935,000 today. Why is there a wealth gap? The wealth gap was created by money printing. And what money printing does is that those who earn a wage get stolen from, and the way that you get protected is by owning assets. So the average worker doesn't own a lot of assets. They're going to get destroyed if their printing money government is printing money and stealing purchasing power through the currency, which is, I'll call it an inflation tax. And also, we opened up the border, so to speak, and we're competing against the world. It's a combination of those two things. So I think the majority of it was stolen through the currency by government. Oil inventories and prices have tracked closely over the past 15 years. Fundamentals matter beyond the short term. The recent disconnect between inventories and prices is resolving to the upside in oil prices. So this is inventory. Usually prices move with inventory levels, and I think U.S. oil inventory levels are reversed. So as they increase inventory levels, your oil price goes down. As they deplete, they go up. Right now, we have the red above the blue. So blue's the WTI price, red's your inventory, and we are below that. And there's only a few times in history that we were below that. There were a couple times where the price front ran a market surplus, and maybe that's what it's doing in the short term. Maybe price is low because it's front running a surplus. I don't think it is, but 2025 we could still have a little bit of a surplus in the short term. After that, I think it gets a little bit gets tight. Here's off the quarter one and quarter two lows. Platinum is 42% higher. Uranium's up 40%, nat gas up 39%. Those are your big winners. Oil's up 31%, silver up 27%, gasoline up 20%, copper up 20%, rhodium up 19%, palladium up 15%, coal up 13%, and wheat up 12% per Bloomberg data. High Heat says if global decline rates in oil is 8%, we're facing challenges most can't imagine. And that's where my mind is at. My mind is 100% at that 8% decline rate, which is, 8-9 million barrels a day. Where are we going to get 8 to 9 million barrels per day of production every single year? We need to find that. That's a Saudi Arabia. Saudi Arabia is pumping about 9 million barrels right now. We need a new Saudi Arabia every single year for the rest of our lives to stay flat. Think about that for a second. You should not be confused with Redfin saying prices just hit an all-time high. The healthy aspect of housing in 2025 is more supply, and the supply is still pretty dang low here, guys. We're nowhere near the 2000s bubble. This is more of a average inventory level. We're still below that at this exact moment. Doesn't mean we can't go higher than and get back to average, or even higher than average. We'll have to see if it keeps going. U.S. crude oil production since December of 2024 is flatter than a pancake. December 2024 exited at 13.172 million barrels per day. The current production is 12.9 million barrels per day. Flat. And then Jordan Roy, he says, there's serious upside risk in silver over the next 12 to 18 months. That means big upside in the right companies. If the sector is correcting now, that's an opportunity. What he says, this is what he says for his way to find silver companies. He says, 1, the simple criteria for silver projects deposits, size, grade, and likelihood of becoming a mine. That's it. Big, high margin, and will be funded, developed, and built. Now let's dive into each. Size, bigger is better. Duh. The market and industry want big projects. The minimum threshold is 80 million to 100 million ounces of silver. That's exactly what I used as a threshold. It was 100 million ounces. That means the projects can produce plus 8 million ounces of silver per year, which is a key threshold for producers. Gold counts towards that threshold, base metals do not. This helps avoid projects with smorgasbord of metals dressed up as silver equivalents that contain too little silver and gold. Base metals as part of a silver deposit are far less valuable than gold. Rick Rule recently mentioned he wants to see a minimum of 10 billion in recoverable ounces. At the current silver price, that's a 275 million ounce silver. Let's consider the next threshold. For small exploration companies, look for smaller projects deposits that have potential to grow to 100 million ounces of silver. Another opportunity is to look for the 100 million to 200 million ounce deposits that have potential to grow to 275 million ounces silver. High grade or higher grades equals higher margins. The bare minimum should be 150 to 200 grams per ton silver, not counting oxide or open pit projects. So ideally, we like to see 300 to 500 grams per ton for underground projects. For oxide or open pit, 150 grams per ton. Again, gold and silver are most valuable, but base metals mineralization boosting the grade is fine. It is far more valuable with respect to grade than size. This introduces some metallurgical risk, so pay attention to that. 4, a high likelihood of becoming a mine. This is where we separate the pretenders from the contenders. This is also where the plethora of risks are introduced. Will the project be permitted? Is it good enough to be funded? How's the metallurgy? Many of these deposits in polymetallic, which introduces metallurgical risk, is the mineralization thick enough? There are some silver deposits with high grade, but mineralization is quite narrow. You can't profitably mine 1 to 2 meters of mineralization 400 meters below the surface. So in summary, the criteria helps explain why certain silver projects are valued more highly than others. It's all about economic potential. Big, high grade, and will be a mine. If it only marks 2 of the 3, the market doesn't care because there is a fatal flaw. It's too small, grade is too low, or it won't be funded, permitted, built. Your silver stock is lagging because the market is sniffing out one of those flaws. The absolute biggest winners will be those projects that have less than 40 to 50 million ounces of AG now, but will end up growing well over 100 million ounces of silver, or the projects with 100, 150 million ounces that can grow to 275 million ounces. So those would be your big ones there. And that's where I'm going to end it, guys. Give me a thumb up for the content. Subscribe to the channel. Subscribe to the website if you like. Special is the coupon code. I've uploaded the weekend Q&A meeting. It's on the website. And that's all I've got, guys. So we'll catch you next time. This is Finding Value.